Welcome to the virtual roadshow series on Channelchek. Today we are featuring DLH Holdings Corporation, NASDAQ ticker symbol DLHC. Research coverage of DLH Holdings is provided by Noble Capital Markets. Noble is a FINRA licensed SEC registered broker-dealer. All Noble research is available on Channelchek. Following the formal presentation, Joe Gomes, the Noble senior analyst covering DLH Holdings, will ask our presenters a selection of the questions received. The source of the questions will remain anonymous. And now, here is Zachary Parker, CEO and President, and Kathryn JohnBull, CFO of DLH, to make the presentation. Zachary and Kathryn, take it away.
Good morning. Good morning and welcome to the investor presentation for July. We are excited to share with you all today the story. I'm joined here by my Chief Financial Officer, Kathryn JohnBull, and we're going to use today's session to give you again an orientation of the company, a little bit of its history, the transformation, and the trajectory that we're on today. And then, of course, we'll love to invite questions from Joe and others. So thank you. And as always, we do lead with our forward-looking statements, and we respect the fact that anything that we'll address today will largely just reflect that which is already published. So, we are due and scheduled to release our earnings within the next few weeks?
Yes, August the 6th.
August the 6th, so stay tuned. Next slide. Again, brief overview, and we'll touch on some of the Q2 results, Q3 results will be pending, and then we'll do the Q&A. So as we talked about, as I mentioned before, we are, the company is a 50-plus-year-old company. However, we fashion ourselves as a 50-year-old startup company, in large part because it wasn't until 2010 when the board of directors, on behalf of the shareholders, took a look at the business base at that time, really in 2009. It was largely a commercial business at the time, commercial and temporary staffing type of business. And somewhere along the way, they had acquired a little small government contracting entity, at or around 35, 40 million at that time. Once they did outside assessment, made a determination to divest the commercial business, and it was recommended that they keep the government contracting business and see if they could build something from that. And so we really became a pure play government contractor in 2010. I started in February of 2010. I was the first board addition to run the government contracting business, and we'll talk a little bit about the story going forward. As you can see from the slide here, it was very important in our first couple of years to really stabilize the business and to build some a different culture. We're very focused around strategically growing in a fashion that ultimately results in the status of the business today. And we've got a lot of data around what those strategic growth elements were, and we'll address some of that in the future in the rest of the presentation. We did in 2015. Having turned the corner when Kathryn joined us, which was in 2012, we really then built a strong runway to build from which to build the business. And in 2015, after a lot of our competitive landscape began to change even further, we laid the groundwork to add the acquisition component to our book of business. We have grown organically each year since 2010, right? And as you'll notice, we've had two inflection points with acquisitions in 2016 and 2017. Both of those, again, were key to fulfilling a couple of the key strategic elements of the company. So we'll talk a little bit more about some of the technology tools that you see below, and again about the shaping of the company as described above. As I indicated, we've continued to grow since 2069 in and around the government contracted business. Large portion of that meant that we needed to build a large center of gravity here in the National Capital Region, and having been headquartered in Atlanta, Georgia. And we've done so largely through the acquisition of Danya in 2016, gained a footprint here in Silver Spring, expanded that footprint with the acquisition in just last year of S3, and we've also expanded our office facilities to include a relatively large facility, 125 or so folks in Durham, North Carolina, as well as an office in Kampala, Uganda. And we also have a laboratory facility in the Research Triangle area in the Durham area as well. But we've continued to grow organically and now have reached north of 2,000 employees across the United States. A key part of our business is our biggest heritage business, which is with the Department of Veteran Affairs. And that gives us a footprint in 9 different locations, 9 different states throughout the country. We range from smaller operations supporting the VA in and around 100 plus folks to as large as 350 individuals in a location providing support for the VA. Strategically, as we built upon that trades business that's largely doing supply chain management, you can see that part of our strategy was to move, quote unquote, up the food chain, if you will, in the government services arena. And that meant that we'd be adding larger, complex type contracts, higher complexity type of work. That work in the government services business generally offers higher gross margins. We're able to compete favorably in that arena as well as acquisitively, and built out our portfolio from what was largely temporary staffing entity, began leveraging our pharmacy background in the healthcare arena. And today we represent largely the 4 areas you see up above, where we continue to differentiate ourselves through leveraging technology and key technology tools. Those 4 areas of healthcare research, disease prevention, program monitoring and evaluation, as well as policies, and actual point of care services for patients, really represents a unique breadth of capabilities within the healthcare space for the Department of Defense and the civilian agencies. And we're real proud of being able to expand our portfolio to not only add that breadth, but to continue to organically build and add depth in each of those areas. As we laid out in 2014 and 15, our strategic market focus areas have consistently been what you see on the slideshow here. That's defense and the VA, as well as human services and key solutions around this public space, and then the public health and life sciences arena as well. And we'll talk a little bit about those as we describe our operating entities going forward. Next slide. With the addition of social scientific, it really rounds out our portfolio, gives all 3 legs of the stool that we've been strategically addressing since 2015. You can see here that we've got some pretty good balance around these operations. The public health and life sciences really got a major infusion of capability as a result of our most recent acquisition of S3. We've continued to organically build in our HLS business, supporting the defense and VA arena, and it's approaching $100 million of course of this year. And then we're also continuing to expand our footprint in 3 or 4 different agencies supporting the human services and solutions market. So that breadth really helped us to move away from a heavily concentration type of portfolio of just 5 or 6 years or so ago, and now gives us breadth to be able to approach and attack the market with really some nice differentiating tools and capabilities. As you can see, we've expanded our federal focus on the right-hand side, and we're going to add a little more color to that as we talk about our new business pipeline as we go forward. As we have built scale in the business, as Kathryn will indicate, that we're on pace to be in, north of $200 million operation annually. It's very important for us to still be able to differentiate on the organic growth front. And as such, it was critical for us to not only build in-house capabilities around these tools and technologies, but also it was critical for our acquisitions to help us accelerate our growth in driving value propositions. In 2016, we launched with the acquisition of Danya. We really launched on the development and migration of a completely new cloud-based federal health IT system. And we were able to declare victory on that and achieve ATO in 2018 and 2019. And that was a key component to our building our information systems capability. And we were able to then surround that with some new technology tools to execute that business base. A key signature program in that arena is a program that leverages SAS as one of the primary analytic tools, and that's our Head Start program for the ACF community. In addition, we were looking to invest and had a make-buy decision before us with regard to really strategically wanting to expand in the secure data analytics arena. That meant both have the right type of platform, secure cloud-based platform, as well as the breadth of analytics, statistical analysis, and other analytics tools to include visualization. And while we were making those investments entering 2019, we were able to secure the acquisition of S3, Social and Scientific Systems, which had already achieved an early status of FedRAMP progress and provided that platform for us, and also substantially enhanced the analytics tools to augment what we had been building over the recent years. So we're really excited about our ability to drive new value propositions, leveraging those technology tools, and to be able to differentiate ourselves now as we compete organically in this very, very aggressive government contracting space. The FedRAMP solution that you see there is also a very differentiating capability in this space. You've seen recent press releases on the progress that we've made there, but we think it's going to be very, very critical if you're going to stay in the DoD and the federal civilian agency marketplace to really have the ability to cost-effectively secure large scales of public and private health data, and be able to do so in an environment that allows you to drive analytics and make important informed decisions, evidence-based decisions, as our government agencies move forward. And that's a critical component for us. It's a critical component of our second acquisition, and continues to build on that strategic glide path of differentiating capabilities that we laid out in our strategic plan. Next slide. As we've continued to grow organically and acquisitively, we've expanded our core competencies, as you can see here. These, seven, represent some of our key competencies that we're leveraging as we go forward in a go-to-market strategy into new businesses, as well as we drive investment back into the business in developing our talent, our human resources capital, to ensure that we're able to deliver high-value performance excellence to our existing customers. We think you have to leverage that your current capabilities and differentiating level of service to your current customers to be able to expand into the adjacent markets as we've done recently, and will continue to drive as we go forward. And then, as I indicated before, our trajectory is a function of how strong our new business pipeline is, as well as our current book of business with regard to our backlog. It is important for us to still be very strategic as we look to which agencies we want to grow in. As you've seen recently, we've just brought on Jackie Everett, which is indicative of the caliber of organic growth position of this company. She has a tremendous background with regard to organic business development, and it will help to shape and elevate the quality of this new business pipeline as we move forward. It's very important for us to be sure that we have a strategic alignment, because we just can't have an indefinite amount of resources to go after all agencies. And so what you see here on the right represents those agencies that we still feel a great deal of addressable market share is out there, that with the differentiating skill sets that you saw in the previous slides will allow us to be able to compete favorably and continue to compete favorably for organic growth. There's also some adjacent markets, some adjacent agencies, as you'll see here, to some of those within HHS and the VA that we think is also a great opportunity for us to grow organically. And then lastly, I want to talk a little bit about some of the recent opportunities that we've had to expand our business with in the infectious disease arena. And Kathryn has recently had a briefing, I think, that we put out, was it about 2 months or so ago, in the early stages of our COVID development. And we want to give you a little context to some of the things that we've been building. Kathryn, would you like to comment a little bit on some of these expansion areas?
Sure, of course. It is a fact that every aspect of our business and every market that we manage in and participate and support customers in has a touch point with the COVID impacts. Starting with our legacy business with the Veterans Administration, there's clearly been a significant impact on the ability of the military treatment facilities to have veterans appearing in person for treatment and for receipt of their pharmaceuticals. So we've been engaging on that and definitely helping the VA to manage that order flow. It's resulted in additional volumes pushing over our way, but it's also made their process more efficient and better able to support social distancing. The human services and solutions really, particularly in the area of health communications and helping people to understand how to stay current on outbreaks and where issues are arising, how to distill down the CDC, things that you would go to the website for, but CDC is a customer of ours in the Twitter sphere, for example. And so taking things that they develop as long form documents on the web, they've asked us to distill it down to very digestible Twitter messages that they can send out on a health comm basis to reach people that don't necessarily access their news in a traditional format. Additionally, we're working with them in support of helping to develop some contact tracing algorithms, ways that people can track their contacts and provide the information necessary to manage the disease progression as we're settling down and thinking about a sustainable model for managing the COVID developments. And then, of course, in most extreme, our public health and life sciences sector is connected throughout the business with all of its customers, but most particularly in the National Institute of Allergies and Infectious Diseases, which is notably led by Dr. Fauci. He is one of our primary customers in this public health and life sciences sector, and we are doing numerous opportunities for those agencies in support of COVID research.
And most recently, we've continued to add new work through expansion of some of our existing contracts and BPAs. It continues to be a quick turn means used by the infectious disease community to be able to tackle pandemics and things of this nature. And we just recently, I think yesterday or the day before, provided some additional color around some of the work that we just recently expanded. That work is, again, continuing to evolve. We expect it will evolve over the course of the next year as we continue to look for not only vaccines, but a variety of therapeutics for various applications in managing throughout this COVID-19 window. The range of work also is something, as Kathryn alluded to, will continue to expand for us in the near term. It includes not only health communications and disease prevention interventions, but also will include disaster response and pandemic response means and trials, et cetera, so that local organizations, community organizations, states, and even at the national level, we can address our preparedness for responses to pandemics such as this. Most of this we have built their long-term relationships with these agencies as a result of other previous pandemics and infectious diseases, not the least of which is HIV/AIDS, Ebola, SARS, and others, where we have a large contingent of epidemiologists and public health professionals that have been leading the charge for Centers for Disease Control and the NIH as we move forward. Those continue to be two primary agencies that we'll continue to focus on for our expansion in this arena, as well as leveraging our long-term network with partners in these type of battles. Our partners include universities with just tremendous medical research centers, includes hospitals and clinics throughout the country and actually throughout the world, where it's important for us to make sure that we can establish the cohort and the number of patients to be able to conduct large-scale trials. In many of these cases, they're double-blind type studies, and as we build those kind of sample sizes, it really requires greater bandwidth, and that's one of the unique things that we've been able to leverage. And we've also, fortunately, been able to do some long-term longitudinal studies that have been in motion for well over a decade, and from time to time we're able to expand that cohort. In fact, we're looking within the next couple of months of expanding some work relative to some cancer studies to tie and link those to some other environmental impacts associated with the COVID-19. So we're really excited about the breadth of this work. And as Kathryn indicated, we have 3 operating units that are battling in their respective ways of dealing with this challenge. But we also believe that it has continued and short and long-term growth opportunities for the company. As we talked about previously, we are really excited about the stage where we're in today with regard to our FedRAMP certification. This is our InfiniByte cloud solution, which is expansion of our SDC, or what we refer to as our Secure Data Analytics Center. And it's important for us, not only for key existing customers, which we've hosted large terabytes of data for use in medical and healthcare policy decisions for the country, but also as we prepare to take this in a go-to-market strategy to expand our business base, leveraging the ability to have cloud solutions, large-scale PaaS applications, or platform-as-a-service applications, to where critical decisions are needed. We're using big data and large-scale analytics. We're finding more and more of a desire across the Department of Defense, Department of Health, DoD health agencies, as well as civilian agencies, to where this type of application and security and cybersecurity is going to be critical. And we're positioning ourselves today. We're in a ready state as we speak, and we're hoping by the end of this calendar year to have received full certification of this tool. So we're going to continue to invest in this tool and technology to build this capability, while at the same time building out a marketing and sales team opportunity to drive different types of transaction-based capabilities and revenue stream to the company. So we're really excited about that, and we'll be adding color to that in the not-too-distant future. Yeah.
Perfect. So here's an opportunity to give you an introduction to the company and the track record we've achieved so far, the trajectory we're on. So as Zach mentioned, we came together as a team in fiscal 2012, in the fourth quarter. The company at that point was pretty recently coming out from under this pretty significant operating losses, largely as a result of the commercial business that was distressed. And so job one, of course, was to stabilize the company and put it on a path to operating profitably. but then set about really upgrading the quality of the revenue we were delivering, building upon that traditional trades-based work that we inherited as our foundation, but really endeavoring to move the company up the value stream, both through acquisitions and through organic growth. At the same time, delivering additional operating base to the company so we could get further leverage of the infrastructure and the cost of operating a company that you're not really you're required to have those things as an infrastructure, but you're best off if you can find ways to leverage them across a larger business base, of course. So this gives you the sense of the growth path we've been on so far. It's driven by our performance excellence and our customer engagement and the acquired capabilities, where we've tried to add value and both through acquisitions of additional capabilities as well as building our own internal credentials through adding, for example, CMMI Level 3 capabilities, Lean Six Sigma, the FedRAMP capabilities we're talking about. Trying to position ourselves to not only, at this point in the federal health markets, it's not sufficient to be a healthcare subject matter expert with knowledge of healthcare issues and policies and even medical capabilities. You have to also be able to combine that with a technology-enabled solution in order to be really competitive in these major federal healthcare opportunities. And so you can see so far our trajectory is about an 18% CAGR, of course, accelerated by the acquisitions that we accomplished in 16 and 19. At the same time, while the trajectory of the revenue has been an 18% CAGR, the profitability has improved, the CAGR rate on that 62%, reflecting really the fact, as we discussed earlier, moving up the value stream in terms of the quality of the opportunities we're pursuing and the quality of the companies that we're incorporating into our portfolio, as well as the additional operating leverage that we've accomplished by growing our business base. Here are our results for the fiscal second quarter, and of course we're right on the cusp of reporting Q3. But as you might expect, given that we had an acquisition in fiscal 19, we had significant year-over-year growth from that acquisition, but additionally also organic growth of about 7% in the quarter, and significantly improved operating income by about 50% as a result of the factors we discussed in terms of higher quality revenue and stronger operating leverage. We've been able to accomplish our acquisition program entirely via debt funding. So we have not accessed equity at this point. We have that as a toggle that's available to us, a lever that we could access should we need to. But thus far, we've been able to accomplish our acquisitions via debt support. And we had a 5-year term debt with our acquisition in 16 that we extinguished in 33 months. We then reloaded in June of 2019. This reflects we had some pretty significant progress by September, and then we had a little bit of a pause for the first 6 months of the year as we went through systems integration and all that suggests in terms of slowing down the process and having the controls and the checks on transition of data from one financial system into the other. Our expectation was and has been demonstrated, which we'll report in a couple weeks, that we have as expected, we've been able to extinguish the buildup in the receivables and deliver significant debt reduction in Q3. So we expect to be at a debt balance of about 42 to 45 by the end of our current fiscal year in September. So that would be about a 40% reduction of our 5-year term debt in the first year. So it's a strong cash operating model. It's a services business with extremely low capital requirements, and we're also benefited by the fact that we have some pretty substantial tax shields from those years wandering in the wilderness where the company was generating pretty substantial operating losses. Obviously, once we put the company on a path to generating profits, we were able to set ourselves up in a position where we could access and use those prior year losses to shield our income and position us to significantly liquidate debt on a very rapid schedule. And so the model for us is really to stay focused. You know, we are, though we're proud of the growth we've accomplished, we are still a relatively small company. And as Zach said, there's obviously not a finite pot of resources. So we stay focused in a key set of markets with a key set of customers and a growing but focused and thematic set of capabilities that allows us to grow the revenue streams, move up those revenue streams to provide margin expansion, to generate long-term cash flow, leveraging our long-term tax shields, which probably will carry us for another 2 to 2.5 years, and then drive growth through organically and through an acquisition program that continues to augment our capabilities and expand our ability to compete. And with that,
we are over to you.
Thank you, Zach and Kathryn. I'm Joe Gomes, the Noble Senior Analyst who covers DLH Holdings. And here are some questions from the audience as well as a couple of my own. First question, let's talk a little bit more about the DLH Infinibyte Cloud and the FedRAMP. You talked about you hope to have full approval by year end, and I wonder if you could provide maybe a little more color about what your target market is there, the size of that market that you're focused on, who some of the competitors in that space are.
Sure, no, I'd be happy to. It's something we're really excited about. We are really, a little bit about the process is, you know, we have, it's GSA kind of owns the FedRAMP certification process, and it has multiple milestones. We've just in the last month achieved the next to last milestone, which is becoming FedRAMP ready. But prior to that, we were FedRAMP Marketplace approved, and so we hope to achieve authority to operate by year's end. What that does for us, of course, is gives other agencies the degree of security that you've got a platform that can meet the exacting standards associated with HIPAA and PII requirements, as well as different degrees of security for data management. The competitive landscape is still evolving. Clearly, the commercial competitors are AWS and Azure, right? Amazon Web Services, Microsoft's Azure, two of the key competitors for platforms. For us, however, we don't really see them as a competitor. We see them really as a potential ally, because what we're building is a data analytics platform, not just a cloud storage platform. So we're generally going to be addressing large-scale customers, much like we have today with several of our customers, where they are not just looking to store data, but they're looking to manage data, and they're looking for the information and decision support that comes with having large-scale amounts of data able to be analyzed in high transaction type of environments. And so that's why we're structuring ours around a PaaS, platform as a service model, which is relatively a differentiating model from that which is in just a cloud hosting guise. So as you move into that environment, we're looking at a couple of tiers of types of new business to bring in. The strategic kinds of deals are much like those that encompass the major agencies within the Administration for Health and Human Services, key programs headed by the Center for Disease Control, the Department of DOD, and particularly the Defense Healthcare Agency, right, where they've got major programs that are starting to come together, including the VA, where they've got to protect and manage large-scale data and analyze that in a very sensitive environment. So the competitors, in many cases, will be some companies that have the domain expertise, right, associated with either the Medicare environment or the VA benefits community and the DOD Alta environment, where they need a player that can help them host that platform, provide a platform to host that data, and to provide tools to help analyze that data. So we'll be partners in many cases with some of the big boys, like whether it be a Deloitte or Accenture or some of those guys, whereas we can infuse this capability and provide some domain expertise. There's also low-hanging fruit for us, we believe, with small business communities and other small agencies, particularly in the state arena, much like we do today, that do not have the type of infrastructure, these exacting requirements, that have a need for them, but are not prepared to invest $2 to $3 million over the course of a few years to achieve this FedRAMP certification level. So anytime you find FISMA high type requirements or Federal Information Systems Management Agency high secure environment requirements, it's going to be important to find companies like ourselves that can provide that kind of expertise and understand the domain around healthcare to be able to be a differentiating offer. So we're laying that groundwork as we speak, laying out that strategy. We expect to come out of the certification process with not only our current business customers, but also some additional adjacent agencies as well.
Okay, thank you for that answer. And if the VA is a significant customer of yours, you have a number of contracts there, a number that have been recently up for bid. And if you could just provide any type of color or update of where the status is of the VA contracts that you have.
Sure, Kathryn, you want to give them the latest on the VAC maps? We just recently got some additional information.
So the contracts that we've had that were awarded a number of years ago and have been on extension, as you know, we had a recompete that we responded to for part of the business in 18 and then the other part in 19. The recompete from the work that was competed in 18 has been canceled, and the work that we have done are doing has been extended presently through October of 2020, so this year. However, we've recently been informed that they'll be extending that another year. So they're continuing to strategize through what their recompete approach is going to be and how they're going to organize it. And then in the meantime, they're providing extensions for us to continue to provide that service for them.
And as you mentioned in the presentation, Kathryn, historically the company has used the excess cash flow to pay off acquisition-related debt well in advance of required payments.
Right.
Do you expect this to continue? And what other uses, if any, of cash flow may the company have?
Well, it's supporting growth of all kinds. And so obviously, as we pursue target opportunities organically, there's a brief period of working capital consumption while you get the program started. But on an ongoing basis, we see extinguishing acquisition debt and pursuing further acquisitions as the primary use of our cash flow.
And this year we've spent, from time to time we spend a substantial amount in what's called bid and proposal funds also for, as Kathryn indicated, organic growth. Mm-hmm. And we're continuing, knock on wood, we have had 10, hopefully we'll have 11 consecutive years of growth. And in some cases, by the way, some of our new business awards have had to offset some, either administration-induced reduction or some turnkey programs that are 1 year or 2 year, you get it done and then you close that out. But at the same time, we have continued to have demonstrated sustainable organic growth. And that's a large function of that is to reinvest back into that business with forms of bid and proposal expenditures, key hires and forward hires to support some of that business. This year has been a particularly high, it was anticipated for us, and we're delivering on a particularly high bid and proposal backlog as we've told the story of some of our opportunities have slipped to the right, and some of those are now coming to fruition. And there are some opportunities that, of course, we were positioning for through the acquisitions that we've now put into place. So this year and part of next year will continue to be important for us to reinvest back in that organic growth profile.
Okay. And Kathryn, you mentioned about the acquisitions, and so one of the questions is what's the appetite for another acquisition, and in what space might that be?
Well, yes, there is an appetite, and we're always looking. It is a healthy market out there, and while there was a bit of a pause in the March, April, maybe early May timeframe, we have seen a nice return to the market in terms of opportunities presenting themselves. So what markets those would be in, now that we've positioned and established a foothold in our three key markets that we outlined back in 2014 or 15, now we would be strengthening and augmenting in each of those markets. So we have a good beachhead, but there are definitely places, for example, in defense and VA health, a key agency we are targeting to establish a presence in would be defense health. We have some degree of contact with that, but generally our strategy for accelerating that and really broadening our reach is tucking in a nice complementary acquisition that helps us augment our capabilities there. So defense health would be a key one. Clearly within HHS, as you know, HHS is a huge cabinet agency with many, many subdirectories, and we've got a position in more than half a dozen now, but there are many others that we have our eye on. And so an acquisition that would be complementary and have a position in some of the key agencies within HHS where we're building contact and capability, but would like to move that along more quickly by augmenting with an acquisition. Those would be likely targets for us as well.
Okay, great. Thank you for that one. And with the recent wins related to COVID, and thinking about the prior modeling of revenue that you guys showed at the shareholder meeting, are you feeling more confident in hitting the mid to upper range of revenue?
We are. We continue to be able to operate in accordance with our plan. We're basically on plan for this year, even though we don't give guidance. We are really feeling that while some of that work is on the COVID side, some of it is turnkey. We're starting to really build some good traction with that client and that customer to be able to expand the type of opportunities we're doing with them. At the same time, we're finding that the VA and the demands for the sort of services that we provide is continuing also to look at having some opportunities that we can help expand on some of our current contracts, and B, that we think we can still pursue that are not set aside for small businesses. We do have a strategy of strategic partnerships to support some of the work with the VA that is high tech and is committed to service disabled veteran-owned small businesses. But we're being very selective in that particular arena just due to the natural evolution to small business set-asides in the VA. But yes, we think that the combination of what we've got going in expanding some work with the Veterans Administration as well as the COVID footprint is really going to help us continue to deliver this year and into next year.
And you'll remember, Joe, in our last quarter's call that we put the yellow light up for you and for all of our other call participants to say, though we were active in COVID already at that point, it was largely a redeployment of existing resources and not really translating to additional revenue. And I think our own expectation was that it would probably take 2 to 3 quarters for things to start to bear fruit for new incremental opportunities. But I think we're all learning about COVID that everything's moving in warp speed, vaccine development and everything. So it is gratifying, and we're of course thrilled that we had the existing relationships to position us to, already be there, already have built trust and confidence in our customers, so that they would steer new work our way and let us support them as they're pursuing their responses, and we expect more of that to continue to evolve. But it's important. Well, that's a very meaningful upside. It's really important as we think about a services business to realize that while we pride ourselves on long-term relationships and the clear majority of our portfolio is derives from customers that we've had a relationship with in excess of a decade, in many cases more than 2 decades. Nonetheless, all of these programs that we are managing are dynamic, and the needs change, and things happen in one given year that don't happen the next year. And so, Zach mentioned earlier how we, with the Head Start program in this last cycle, completely transformed their IT system and moved it to a more accessible system, including web and mobile enabling it and doing all those things. Well, obviously that's not going to recur in the upcoming year. So organic growth has to be achieved in the context of backfilling for those things that are non-recurring from the previous year, and then of course then continuing to expand your reach and delivering organic growth on top of that. So it keeps us busy day in, day out.
One last question here that's received multiple times from the audience. The stock was trading in the 4 to 5 range since July of 2019, and then started to take off in May of this year. To what do you guys attribute this strong stock performance since then?
Well, I think there have been 2 major contributors to that over the time. A is, we have felt like all along that while it would not be immediately accretive, the acquisition would start to really show up, and the folks would start to see the regular value attributed to the acquisition of S3, and that, of course, we felt would come over time, and we're starting to hit that period at having been 3 and now 4 quarters into it. The other aspect is a little bit of de-risking our portfolio with regard to the VA business and the recompete that you referred to earlier. We think that's been an overhang that for a couple of years has contributed quite a bit to throttling the market's appropriate response into what we consider would be getting us to the fair value, appropriately valued company. So I think the combination of those 2 forces over the course of the last 12 months or so have been really, really key in that regard. And, we're continuing, obviously, to build in those very strategic, mission-critical arenas for our nation. And so both sides of the aisle are continuing to be supportive of our program. We know that in our space right now, that is very essential because there are a lot of companies that have been hard hit this year due to the COVID-19 pandemic. And many of those are really, really having to retrench and take a look at are they going to come out of this thing healthy, and if so, how. But we've continued to make sure that we've been really quite stable during this period. We've had, obviously, as you might imagine, the risk that we've talked about before and some cutbacks in certain key parts of our programs. But by and large, we have strategic alignment and a focus that proves and will continue to demonstrate our ability to weather the types of storms and challenges that the federal agencies are facing. And that's going to continue to bode well for us. And as long as we continue to build these additional differentiating capabilities and grow organically, with the addition of our restructuring, our leadership organization, and the operations below that to better position us now that we've got, as Kathryn indicated, the kind of platform that we've created to this stage. We're anxious to get to that $300-400 million arena.
Absolutely.
And scale accordingly.
Great. That's all the time we have for today. Thanks again, Zach and Kathryn, for helping us get a better understanding of the DLH Holdings story. If you'd like to get the research I've written on DLH, go to channelchek.com and type in the ticker DLHC in the search box in the top left Check the Channel section. Thank you for attending. Watch for more virtual roadshows coming soon on Channelchek. Goodbye for today.
Thank you, Joe. Thank you, everybody.
Bye now.